Welcome to the program. Today we're going to talk about what's happening on global financial markets, and we're going to continue our look into earnings season. It's been a big week. We've had Fortescue, we've got Qantas, we've got Woolworths, we've got Wesfarmers and many more. I'm Marty Switzer.
I'm Peter Switzer.
And we're mad about money. Pete, first question, where's Paul Rickard today?
Apparently he's servicing his very, very groovy car. He's a bit of a rev head,
In the middle of earnings season.
Yeah, I know.
Very, very disappointing. Anyway.
That's what rev heads are like.
Before we talk earnings season, markets, when's it going to sell off, Pete? Is it going to sell off? It's still sticking around that sort of 5,500 level.
Yeah, I'm accused of being a perma bull, but I've actually thought after we've gone up like 18, 19% since mid-February, we're due for a pullback.
And a pullback could be healthy. Is healthy.
Yeah, it'd be a buying opportunity for me. I wouldn't go running. And that's part of the problem. There's nothing super sonically scary out there. And in fact, I think it was Morgan Stanley this week made the point that probably the only thing really scaring the market at the moment is the possibility of a Donald Trump winning the election. And he does look like he will win the election. So it's public. And also we don't know when the Yanks will raise interest rates and all that sort of stuff. If they thought they were going to go in September.
Earnings season, which we'll talk about in a moment, is, I guess, performing moderately. I think a bull would call it, a reasonable performance.
Yep.
A bear would say disappointing.
Well, of course, but look, I think as of last Friday, Shane Oliver did look at the numbers. He said 51% of companies have reported, 46% exceeded expectations, which is around normal. 68% have seen their earnings rise on a year ago, which is a pretty good result. 56% have seen their share price outperform on the market day that when the results were coming out. And 92% have either maintained or increased their dividends. And we're buying stocks for dividends, so that probably explains it all.
Yeah, and so obviously that's feeding the demand of investors that are continually hunting for yield in a world where rates are going to be...
Return deposits going down, down and down.
Be lower for longer.
Yeah.
So let's talk about earnings season in general. Keen to talk about some of the big companies that have reported this week, and we've still got a few to report later in the week. I think Wesfarmers out in a few hours. Woolworths out later in the week. We had Fortescue on Monday. That result was good. Some concerns around the debt though.
Yeah, but I think this is a company that was really in the poo, for the last few years, and they've looked at the overall results, and they're seeing it now as a real iron ore company, not just like a speculative iron ore company. It's now the fourth biggest iron ore company in the world, behind BHP, Rio, and Barrie. So I think the credibility that it's got in the market has now justified its big rise in its share price.
He's been a tremendous entrepreneur, Andrew Forrest.
He has.
Australia. When you think about what he's been able to do and what he's been able to compete against.
Yeah, and he's been smart enough to put someone like Nev Power in place, and Power's done a great job with that company. Costed out a lot of stuff, got the stuff, the actual iron ore, on the trains, on the boats, going to China, and Fortescue's had a really good story.
Qantas, a stock that some people love, but then also, as Warren Buffett said, if you're ever going to if he's ever tempted to buy an airline, he's got a telephone number to call for help. So obviously a risky place to put your money. But Qantas has reported this morning, and the best profit in 95 years.
Yeah, and they're paying dividends again. I think it was 7 cents or something like that.
Yeah.
Look, the thing is this. Alan Joyce made some mistakes early in his running of Qantas. Pulling the planes out on Derby Day wasn't one of his smartest plays. But he has actually taken the costs out. He's turned it around. He's been helped by the fact that oil prices have slumped. But the reality is the share price has done really well under him. He's done his job as a CEO. He can be really happy about that.
Yeah, he wore a lot of heat early on in his leadership, but
he's pulled it off.
He has really turned it around, and he'll go down.
As the greatest Irish businessman of all time, and in Dublin, they rate him big time.
Absolutely, and so should the Qantas shareholders over the last couple of years now.
For sure.
Other results that have taken your eye. What are you expecting with the supermarkets? Woolworths are looking like they're going to report a shocker.
Yeah. And this is the important point, Marty. You look at some of the stories, like for example, we've seen Bradken and Monadelphous, APN Outdoor. A lot of these companies have disappointed and they've been really clobbered as a consequence of it. But a lot of their problems have been this year. See, a lot of the mining services companies, there was a hope that they might actually rebound, but all their story last year was their customers, their commodity prices were falling, and so they costed out their big companies, and costing out means not giving any business to the mining services companies. So they've really had some bad stories. Woolworths, it's got this Masters problem. It's going to be in this year's report, so it's not going to be good news. BHP is another case. Bad news from last year, but the outlook for BHP is going to be good. And I've also liked the fact that some small industrial companies, the likes of like Green Cross, they've reported pretty well. Seek's done very well. I think the fact that industrial growth companies are doing pretty well is a good sign for the future of the stock market.
And the
retail explains why the market's not
and the
going
consumer
down.
discretionary retail stocks as well. Obviously, JB Hi-Fi, great result, and they grew the top line, which was a wonderful effort.
And even Kogan's done okay because he picked up Dick Smith's online business. Something like 65% of his $211 million revenue came from that Dick Smith online database.
Yeah. And Qantas is another one that's obviously benefited from the the low interest rates, the low oil price, essentially a consumer discretionary stock.
Low dollar, with the Chinese tourists coming record high, and petrol prices.
So there have been some strong performers. It's just I guess it's been different to previous earnings seasons.
Yeah, without a doubt.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer, and we're mad about money.